and figure this out, it's easy for me to transition and show and teach that as well.
That's
Just
going to be
have our
wonderful. That's going to be
right.
a tremendous asset. In fact, Chima, if I can chat with you offline after we close this meeting,
Hmm.
I got a couple of things that I want to bounce off of you. But nonetheless, what
Sure.
we can do, we can transition this platform
Hmm.
into your teaching platform if your teaching platform will allow it. Because if these guys
Hmm.
are going to be trading a 1, 2, 3 strategy, I would rather them walk away with knowing how to do it versus
Hmm.
just watching it happen.
Right, right. And that's been my philosophy too. And I'm sure you and Curtis probably had that conversation as well. Like my goal is to really empower everybody to learn how to fish too, you know? And
Absolutely.
when we meet on Tuesdays, it's big, man. It's big for us to have these teachable moments and for us to watch charts together, look at support and resistance, just really learn the basics and the foundation for everybody to just start to see how the market moves, understand, really get a grasp for the emotion that they're sensing inside the candlestick formations. What is it telling us? Are we bullish? Are we bearish? Are we breaking support? Are we holding, against resistance and things of that nature? Just really building the understanding as to, all right, chart reading 101, and just
Absolutely.
understanding how to grow in what I call a trader's toolbox. Before you can really step up to these levels in which we're talking. I know a lot of people on the call like, all right, they're still speaking Japanese, but eventually, some of the basics that we've covered was something out of left field to a lot of our traders in the beginning. So now, the verbiage, the jargon, the understanding and stuff like that, they're really growing and growing and growing in their understanding just in just talking shop, and then now being able to look at a chart and interpret when something's being bullish or bearish or how to recognize a buying opportunity or a selling one. So it's quickly I'm surprised and impressed with how much the team has grown so far, and I think that us incorporating, a lot of what you're doing there and being able to interpret that for them and show them that on a chart and help them understand that and walk them through will obviously make your job a lot easier too. So
Absolutely. I'm in perfect alignment with that because the fact of the matter of Curtis and I have had some extensive conversation about the alignment to which is setting up to where we have a trading tool and a subsequent teaching tool. It's a wonderful alignment, and I think it'll be beneficial to all, especially when we start to leave behind what it is that we know collectively to say, hey guys, you can do this. You can do this. That empowerment is a special, it's a magical thing when you can look at these charts and say that I can do this. That's what we want for all these guys, and I think it's going to be a wonderful alignment, Gina.
perfect.
Without further ado,
Perfect.
guys, that was it. I just wanted to put a picture footprint on it so people will understand what it is that they're going to see. This chart right here is going to be blank, except for the 5 charts that we're trading come Sunday night, and then we'll
Hmm.
add to them as the day progresses. I'll go back into the box and I'll do my charting Monday evening for Tuesday,
Hmm.
and
Hmm.
we'll start all over.
Okay. Sounds good.
Fair enough. Any questions, guys?
Sounds
Are
good.
we good to go?
I have one question.
Absolutely.
Okay, I just wanted to make sure I had clarity on the terminology of the pending, working, active, and closed. Naturally, we know the close is the trade is done, but the pending, does that mean that you're ready to go and trade, or we still pending further information before we go into trade?
No, sir. That's an excellent question. The pending trade, that means that the entry, the stop, and the limit that you'll see to the right columns, those
Okay,
are active on the charts. And all we're waiting for is that candlestick to come down and grab us or go up and snatch us.
gotcha. Okay, okay, and then the active is that you actually are in the trade.
We should all be in those trades at that point.
Okay, perfect. All right.
Because see, here's the thing about this particular strategy. We traded on 2 hour candles. So a lot of times when we're working on candlesticks and we're waiting on the right side of that engulfing candle, we have 2 hours for it to set up.
Okay.
So we can put the working title in that status, and then once that candlestick formation closes or forms, then we can set our entry levels, and then it will go pending.
Okay, gotcha.
And again, that's what the Dropbox is designed to. That's what we're utilizing the Dropbox for, is to do the heavy lifting. So when we do that, when we update the sheet, we can send that alert out. That's what all that commentary was about on that game plan today, to make sure that everybody was pinging back and everybody was receiving the status and the correspondence that's going through that thread. Because come Sunday night, when we go to activate these trades and we're saying we're working on this one, I'll update the sheet and say the GBP CAD we're working on that. When we go and take it from working to pending, everybody will know. That way nobody has to sit in front of charts all night long, because it makes sometimes you make bad decisions when you stare at charts all day.
Very true.
Very, 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 very true. You know this to be true, Chima. It's really easy to mismanage yourself and not trust your stop or not trust your limit if you're watching a 2-hour candle on a 1-hour time frame, because there's a lot of movement that happens inside that 2-hour candle.
Mm-hmm. Right, and that's something that we talk about all the time, that you have to. These candles will take different shapes and forms as they're forming, and if you misread it, then it's going to tell you something different. So it's important to wait for your formations and wait for your indications that way, and take them. But yeah, it's a good setup. Totally agree with that.
Very good, very good. Any other questions, gentlemen?
First, I'll probably get with you offline. I missed the first 5 minutes of this.
It's recorded.
Pretty much think I got.
It's recorded. We'll send it out. It's no worries. That's why we wanted to do this, sir, because we wanted to make sure that we had a platform, and GoToMeeting's been around for a long time, but we spawned this at the very last minute to say, hey, look, some guys are visual, and I get it. Some guys are really visual, and we need to make sure that we provide them a visual perspective as to what they're going to see come game time.
Right.
It's recorded. We'll send it out.
Sounds good. You want to touch on the equity management a little bit?
Equity management, guys. Chima, you may be better suited to deal with the equity management on your side, because my position is, when you're looking at a set of trades, for example, Sunday night we're looking at 5 trades. Mm-hmm. Now, depending on everybody has different kinds of money and different stacks of money. So I never tell anybody you have to trade this at 2 lots or 1.5 or 1 or a half a lot. I would never do that. What I would do is I would say, what you have to take in consideration is the risk that's involved. I'm not really concerned with what's to gain. I'm more concerned about what can potentially be lost. And if you take what can be lost by way of the stop, that should give you a gauge on how you should manage your equity management from that point. Because if you have $1,000 trade, or if you have $1,000 account, and you put a 70 pip stop at risk and you run it at a full lot, we're talking about $700 that you could potentially lose.
Mm-hmm. Mm-hmm.
And I just don't think that it's appropriate equity management to put yourself at risk for 70% of your overall account on one trade. I don't believe in trading any more than 60% of your overall portfolio, much less 70% on one trade.
On one trade, right. And that's a little bit of what we talk about as well. We haven't gone into all that as well. And when you and I talk offline, we will discuss that a little bit, because I wanted to understand a little bit, like you said, as far as on average, what are you looking at as far as the stops. But yes, we talk about that constantly, as far as have an idea of a dollar amount that you're looking to lose. So I actually sent out we had that conversation in class one day, and Curtis and I actually was speaking about something, and I quickly put together a little spreadsheet for them to have. It's a really simple spreadsheet for them to plug in the dollar amount they want to lose, and then you type in the amount of pips that's associated with the stop, and then it'll kick out to you your lot size. So it'll automatically calculate the lot size for everybody. They plug in the amount that they want to lose on that trade, the amount that's associated, the stop that's associated with that particular trade, and then it'll tell them exactly, on this trade I'm going to risk 0.3. On this trade I'm going to risk 1.5. So most of the guys, I think most of the guys on this call have that. If anybody needs that, I can send that to them as well. And then as far as, everyone has to make a determination. All right, so let's say, for example, we're going to take 4 or 5 trades this week. On a whole, you might want to calculate initially, I'm willing to risk 30% of my account on all 5 trades. And then when they come out, you can calculate, all right, the dollar amount, whatever 30% is, whatever 20% is of your account, or if you just want to do 10%, you can calculate what that dollar amount is, and then you can split it up evenly. So if you only want to risk, if you have a $1,000 account, you want to risk $300, you want to risk $400, 400, or let's say $500, 50%, 100 on each trade. All right. When you get the stop size, you plug in the number of pips for each stop. It'll kick back out to you the number of lots you take on each trade. Something simple like that. But I think especially in the beginning, we can keep it as simple as possible, like what you're saying. Everybody has a different risk tolerance level,
Sure.
Or risk appetite, and we can kind of put the tools in your hands for you to use, and then just have an overall conversation about it. But you hit the nail on the head there. The idea is to understand how much of your overall account you're willing to risk, and then if you divide that equally, let's say amongst the trades, you spread out the probability of success. So if 4 trades hit but 1 lose, then okay, great. And then once I fully understand a little bit more when I talk with you, I can design something and teach them that easily on a
Sure. I have a trader's checklist that I keep on my MacBook Pro at all times, but the seasoned trader can look at the stop and measure the stop and say this stop right here is 40 to 50 pips.
Right.
Looking at this chart that we have here to the left, the biggest pip loss that we took was a 73 pip loss, and that was a mistake, an inherent mistake that I made on my side. But nonetheless, the strategy is built on a 50 to 60% or a 50 or 60 pip stop because of the candlestick formations and the depth of the wick. And then we're going to add the spread, and then we're going to add the 15% or the 5% to allow the trade to breathe. But ultimately what it's after is I'm not going after a trade that's going to be 150 pips deep. I will rather wait for it to come back to the 786 or the 860. A lot of times when we take them at the 618 level, your pip risk is 160 or could be 100 pips. And I'd rather wait for it to retrace just a little bit deeper and grab it at the 860 level so it makes better equity management sense to take it at the 860 level or the 786 level. That's just my style, Chima. I'm not really interested in putting my money or anybody else's at risk for that matter on a daily trading chart. Now, if we're talking about monthly candles and weekly candles now, of course, that's going to be a different scenario.
Right.
But on a 2-hour candle, I just don't find it appropriate or even acceptable to take a 150 pip risk for a 200 pip move. I'd rather just go to the next trade or go to the next pair or wait for this guy to retrace a little bit deeper because he's going to come back to the 382 level anyway.
That's one of the benefits of trading this style, and as everyone eventually begins to learn it and understand it, they'll get it. But when trading with its candlestick formations against certain levels of resistance or support, Fibonacci patterns, Fibonacci levels, and understanding, waiting to get a signal at a particular level or based on a particular pattern, that's the whole idea behind pattern trading or fib trading or these levels, these types of tradings, that you're able to risk that one candle, or you're able to risk, or when it fails, like, all right, if you get into a trade and okay, we close below that particular level or we break this particular support, all right, one candle should let you know it's failed and you probably have to wait to the next support level. So that's the benefit once you understand the style or you become well versed in it, that you don't have to risk as much. Currently right now what they're learning is understanding, let's say, pivot highs and pivot lows and the significance of them, and then understanding, where to put your stops as far as just understanding, okay, these pivot lows have a particular relevance. All right, so if you're going to take a trade, you should know how to allocate or put your stops based on these levels that were previously significant. Eventually, they get up to the point, eventually later on, like fully understanding fib levels and why they draw and why they mean and what happens at, near, or around that. So we're not quite at that level yet, but getting them to the point where why is a stop relevant? What makes a stop relevant? Why are these levels here? Why do we have swing highs and swing lows? And so working their way up to exactly what you're saying. When you apply a lot of these advanced techniques, you're able to pinpoint specific areas where you minimize your risk. Where you're risking 10 to make 30, you're risking 100 to make 300. So you're doing things like that where you're really skewing your risk reward in your favor, much less
Sure.
where in some instances, especially newer traders tend to risk 200 to make 50.
Sure.
Um,
Sure. Sure.
right. So
We've all been there as traders,
of
excited.
course.
Yeah, we've all been there, and the fact of the matter is, I really appreciate the trend line trades, things
Oh yeah.
bouncing off the backside of trend lines, and you'll see that in the commentary with you'll see that in the commentary dealing with some things that are breaking. For instance, the GBP Australian, we're only going to buy that if it breaks and closes north of that counter trend line, because there is a little bit of room on the outer trend line for it to go down to the daily D extension. Because I'm taking data from a larger time frame and putting it on a lower time frame. So I'm looking at that daily D extension, a 123 right there at 1996. So if it doesn't close north of that 6, I'll wait for it to fall down and hit that D extension. You and I both know what happens when they hit D extensions, or counter trend lines, or upper trend lines, or outer trend lines from larger time frames. Something usually happens right there because past support becomes future resistance.
Right.
That's
Exactly.
that's just that that's
And
just how the game is played. And
yeah, and what happens, and I'm glad you said that because um a lot of times we get ahead of ourselves, especially the newbies and learning, and a part of the conversation we've had is building up that toolbox is not forgetting some of the first things that you learn. And one of the primary things that we learn when we first start trading is, drawing a trend line or recognizing support and resistance, or even realizing the importance of it. And everybody wants to jump to the sexy trading of Fibonacci trading, but a lot of times, I mean, many great trades are trend line break, retest, follow
oh
through.
my god,
It's just like a lot of these trades, just the simple consolidation breakouts, or pattern recognition, and things that you learned when you first started trading, but you didn't feel were cool enough. They work time and time and time again. So the idea is to become well versed in all aspects of it. Take time to learn and appreciate some of these beginning techniques before the rush to get into Fibonacci. So
that's right.
Fibonacci is difficult in and of itself. Learning it
That's
and understanding it, and understanding the
absolutely.
patterns that are associated with it. And ideally, my goal is to kind of slow everybody down in the course and really learn to appreciate exactly what you're saying. Just truly understanding support and resistance, the power of it, trading off of a trend line, understanding what a candlestick formation off that trend line means, understanding that you might get a significant break of a trend line, but it's coming back to retest, and then on the retest, you're looking for some type of confirming candlestick off of that level to give you your buy or sell signals. Really simple things like that to just learn the craft first.
Yeah, it's
Learn
the
those things.
basics. Sure, sure. It's the basics. Now, this strategy right here, this 1 2 3, it works really well, Chima, because it keeps you from prematurely or inadvertently
Hmm.
getting into a trade. And
Hmm.
I've said for a very long time, the best trade is the one that you didn't get into that was a bad trade.
Hmm.
And a lot of times I see people get into a trade because they have a indicator. Well, this 1 2 3 is designed on 3.
Hmm.
It's the pivot point is 3 indicators, and that's the stochastics. I trade on the RSI, the relative strength index, and that means that when this thing breaks that 80% resistance or that 20% support, that means that we're going to have 7 to 11 candles, whatever time frame that you're on, for it to fall. That's why we plot this thing out on a daily chart. When I see that daily stochastic coming down into the sell zone, that gives
Hmm.
me a really good confidence level to say that we've got about 7 days to run this thing.
Nice.
That's the stochastic. We need that, but we also need the candlestick formation.
Hmm.
Because you and I both know traders that just trade the stochastics and are wildly successful at it. but we need the candlestick formations. We also need the stochastic, and we also need the break of the counter trend line, an aggressive counter trend line at that.
Right. Right. I mean, because those confirming or confluence, as they call it too, those things, and this should sound familiar to a lot of the people listening. I asked them to write down 3 or 4 reasons why they get into a trade. Just to start
the trader's
thinking along
checklist.
those lines. Right, exactly. So there is a checklist. There's a reason why, like you need to understand the reason why you get into a trade. Why are we here? Why did I get in? And oftentimes you're in a trade today, tomorrow it may be going against you a little bit, or you may be even in your favor, but you need to go back and sometimes recall, like, why am I in here? Where's my targets? Where are my stops? Why did I select this target? Why did I select this trade in itself? A lot of these questions to where when the butterflies start really going, you really can understand and confirm why you're there. But it's not good to roll out of bed, see a candle, or just to see a trend and hit buy or sell. The idea is exactly what you're showcasing here. This is preparation, preparation and understanding why and the setups you're looking for, and having a reason, multiple reasons actually, why you like a trade. The top-down analysis that you're doing, recognizing that obviously the strength of a trend comes from the higher time frames, and you might see a signal in the higher time frame and shift down to the lower one to find your entry or fine-tune your entry. So a lot of these things, we're speaking the same language here. Basically,
Yes,
what I'm
sir.
saying.
Absolutely.
So, it's exciting to chat with you, and Curtis has been talking about it for quite some time, so I'm glad we're able to connect. And the style here is definitely similar to at least the idea behind it, and the discipline of it, and understanding why they need to have multiple reasons, and understand why candlesticks, even though you're watching a chart, but you have to understand what these candlesticks mean, because they're telling you a particular emotion of the market. Are we being greedy? Are we being fearful? Are we getting confirmation that it's time to short and time to buy? So these candles actively tell us what the emotion is right now. So it's having multiple reasons why, and confirming your thoughts are critical when you enter into these trades. Right.
Absolutely.
Wow.
And I think that the key word that you said there, Chima, was the discipline. Having the discipline, because there's a lot of times I've looked at trades and it took off and we missed it, but I'm okay with missing a trade because it didn't give me everything that I needed. Because the moment that we start to anticipate market movement, a lot of times you can get taken out behind the shed, is like I like to say. This thing is based on a 1-to-3 ratio. We're risking 1 to gain 3. Sometimes we'll see 1-to-7. Sometimes we'll see 1-to-9. But we will not see 1-to-2. Because at the end of the week, come Thursday, when we shut all these trades down, if we took a 1-to-2 reward and we lost 6 trades, then we may break even. Maybe.
Right.
Maybe. But if you take a 1-to-3 risk reward, going back to the previous sheet that we had up on the screen, we lost 9 trades that week and we still did 800 pips.
Right.
That's why I'm so comfortable with this particular strategy, because it's on a 2-hour candle, and we're not dealing with the volatility of the 15-minute candle and then making bad decisions because we're not looking at a large time frame. Because we all know that the larger time frame controls this lower time frame. So let's go from the top-down approach, and let's chart and plan our week out. We've planned our week for the entire week. And we're not going to change the strategy midweek. We're going to keep on rolling with selling or buying unless we're talking about a King's Crown formation or it hits one of those major support or resistance levels. Then we can readdress it. And that's why we decided that we were going to go back into this thing and rechart it every single day to make sure that we cover all of our basics, make sure we got everything covered. And that way we can go forward the next trading session, the New York trading session, and capitalize on that movement also. We're going to be in good shape.
Cool.
It's going to be a fun week. It's going to be a fun week.
Definitely looking forward to it.
It's going to be a fun week. If that's all, gentlemen, if there's anything else, any questions, comments, concerns, or otherwise things we may have missed,
I
now's our
want to say this
time.
right quick. Yeah, I want to say this right quick as a little plug. I know you guys didn't anticipate this, but for those out there that are listening to this call, that have been listening, I should say, over the last 45 minutes, if you're not in Mr. Burry's course, you definitely want to think about doing that. And as you see, you guys that are, I've been telling you about Xavier's skill level, and so to me, it sounds like we got two twins on the phone, and it's something that we are definitely blessed to be in this situation where we have two professional experts, and that's just do our part and plug in and learn and grow and develop. So, Mr. Burry's course, I mean, you can give your website out for those who may not have your information, but I know there's quite a few people on this call, but I just want to give a plug in for yourself as well as Mr. Phillips for taking time out of his schedule to do this for us. And I love his heart and his passion of giving back, and so we all gonna be blessed as a result. So I just want to give that plug out.
Appreciate that. I appreciate
Appreciate it, man. Well, I look forward to it. I can tell in Xavier's voice that, I mean, there's something about, to me, it's cool when I find other people who are interested in this quirky thing that I love, man. So Curtis, from the first time you and I spoke, I love being able to share this with everybody, and I can tell in listening to X, he has a passion for it too. So it's great when we find people who share that passion and who have a passion not only for trading but a passion to learn it. So like I said, I love to teach it. I love to share it because there's more than enough money out there. And I tell people all the time, we can take the same trade at the same time, and there's still more than enough. We can't move the market.
that.
We just can't.
You got
It's
that
too
right.
big. It's too big,
You got
It's
that
just
right.
too big.
Yeah,
So
it's not
to
even gonna
me,
fill us. Yeah, absolutely.
yeah. To me, it's all about, man. Let's get this information out there and help as many people as we can, and just I'm just excited so many people are into it and like it. So I look forward to it, and Curtis, I appreciate you connecting us all, and I know we're all going to do well and be blessed by it. So that's definitely how I feel.
Well said, Mr. Beery. But I did look over. I glanced over at my left screen over here, and I see something that we do need to address. It's
Okay.
the Euro Jappy pair. It's in blue,
Mhm.
and a lot of people may have the question or the comment or not understand why these things are different colors. The green colors are the trades that we're going after on Sunday, because Friday when I charted them, Chima, I go into the box at 1 o'clock and I don't come out till 5 o'clock and the market's already closed. So
Okay.
when I see something that's setting up for Friday that we can actually trade, it Sunday night.
hmm
That's what those green boxes are. Those are the
Okay.
Sunday trades that we're going after. The blue
Okay.
trade right there, you see right there in the daily note on the daily chart, it fulfilled the 382 and it's at a pivot point on
Okay.
a weekly note. So I'm looking
Okay.
at that thing to push and push fast. That's why it's denoted in blue. And my wife Shantae has been jumping up and down for 2.5 weeks for me to put that instruction at the bottom of the list. But we don't have a lot of opportunity to discuss the type of trading scenarios that we're talking about on a daily basis.
hmm
So I will populate that on next week's charting. I will see to it that happens. Now the white trades, the ones that don't have any color on them,
hmm
those white trades that's something that's going to set up early Monday or late Monday, and you'll see that in the activity sheet because we're not going to abandon those. Curtis and
Okay.
I have, over the past 6 weeks, we've taken our Sunday trades, with the exception of the week before last, and then the exception of Christmas week, or excuse me, New Year's week. We've woken up with the Sunday trades, and they're north of 400, 500 pips just based on the Sunday trades. So a lot of times we've never came back and dealt with the trades that were setting up on Monday because we did so well on Sunday.
Okay. Okay.
Shame on us for that. Shame
So
on us for that.
you thought you left some pips on the table.
Yeah, we left a lot of them on the table, but be that as it may, Chima, what I do, I concentrate on the daily trading ranges.
Okay.
And I put that on there so people can have a very, very quick way to identify the Euro New Zealand has a 305 daily trading range. So we're looking to get about 900 pips out of that trade alone this week because it's going to come up there and fulfill that right tip of that crown and then fall apart.
Okay.
So right here where we say we're going to buy that market up to the right tip, once it fulfills the right tip of that king's crown, and I get it that everybody doesn't understand a king's crown or have the charting capacity to chart a king's crown, but that's why I said sell it at or around the 1.713 because that is the right tip. Left tip equals right tip. So if we're looking at the left tip, we can surely identify what the right tip is, even if you don't have a king's crown tool. And then we'll turn around and we'll sell it on the way back down. If it's moving 300 pips a day, even if it takes 2 days to fulfill the right tip, we'll take all of those pips on the way and then turn around and then reverse that trade and sell it out at 1.73 or 71.
Right.
It's been wildly successful for us in the pilot test, with the exception of the week before last and of course New Year's. But we're not going to abandon the GBP New Zealand because he moves 300 pips a day. We're not going to abandon the Euro Australian because it moves 307 pips a day. We're not going to abandon them just because they don't set up on Sunday. And the activity sheet will reflect that through the course of the week to where it says, well, we're going to look at this thing for Monday at the 5 o'clock candle, or Monday at the 9 o'clock candle, or Monday at the 11 o'clock candle, whatever it may be. It will reflect in the activity sheet, and then it will be a subsequent and an ensuing alert that goes out to tell our traders exactly what we're doing.
Perfect. Yeah, it's true. Like, it's you're right. I mean, to have the setups that are there, everything doesn't always happen on one particular day, and I really want to bring it back to one of the comments that you made earlier, that a lot of traders have to, even as they practicing trading on their own, the fact chasing trades is such a bad thing. And one of the things that when you actually learn a particular technique, style, or you develop your brand of trading, you start to see it, so you see it over and over again. And trading is just your ability to recognize patterns. Whatever pattern that you like, whatever pattern or system you learn, it's just understanding that system or that pattern will repeat itself.
That's right.
And you don't have to put yourself out in no man's land, as I call it, chasing a particular trade because you just want it so badly. And then when that trade doesn't work out, you throw everything off. So the idea is that there will be new trades, there will be other trades. So I just really wanted to echo what you mentioned. That's such a great point. But you're right. Setups that are ready on Sunday are ready to take on Sunday, but then these that are in white could set up on Tuesday, and brand new trades, so that's the beauty of it. But yeah, addressing that and not leaving those on the table would be great. It's a shame to put all the work in, the homework, and definitely not take the trade on it. So
absolutely. This is Chima, this was one of these strategies and the software packaging that we're dealing with, and the discipline of the strategy. It allows you to think institutionally instead of thinking retail trading, to where you got to go in here and candles are moving. So now I'm going to chase this candle, but now this candle's getting ready to reverse at the 11 o'clock candle. And now you got burned because we're putting market trades on and all kind of weird stuff is going on in the market. We got oil announcements. We got fundamental announcements. We got all kind of things that can go on. But when you look at it from the larger time frame and you take the discipline to say, even if I get stopped out on this thing because something sporadic happened to spook the charts, well, it's still got to go up to that daily 382 level to fulfill the retracement.
Right.
It has to go there.
Right. It has to. It just has to. Right.
It has to. It's no question about it. So my thing is just maintain your discipline, stay out of trouble, be aware of what's going on. And everybody, like you said, and I echo your sentiment earlier, saying that there's plenty of money out there for everybody. We are not going to trade between the 12 of us, trade the pound Australian and force that thing to go a different way.
Oh, not even. Exactly. Not even.
Not even close. It's not going to happen. And
It's not gonna happen.
it's not going to happen. So what we'll do, gentlemen, this sheet right here will stay as is. There will be no corrections or no entries to this particular sheet. It will actually be that the activity sheet I haven't built yet, but we'll build that sheet and get everything lined up for it, and we'll put the Sunday trades on there. And another thing that I wanted to do, gentlemen, is make sure that everybody is pinging on that sheet tomorrow.
The activity sheet, right?
The activity sheet, yes, sir. Curtis and I, we had a conversation. That's why we executed that task today, because yesterday we were supposed to do that while I was actually charting, and I got consumed with what I was doing, and he had some other obligations that he had to fulfill. But we wanted to take the time out of our day-to-day to make sure that everybody was receiving the commentary. I know it's a little bit up, it's a little excessive, but we wanted to make sure that every individual that was involved in this particular trading system was getting the alerts. That was Curtis's big thing, the alerts. So we ran that little test today, and it seemed to me like everybody was responding. I say, good morning, sir. Are you receiving? You're receiving. Everybody else is receiving. So we're green light go with this particular setup. So when we build this thing again for the activity sheet, there will be no commentary on this daily game plan. We can refer to it as much as we want, but all of our commentary will be conducted in that activity sheet by way of the alerts. The GBP New Zealand, we just put a pending order in, and it's updated. That way everybody gets it at the same time, and no one person has to carry the responsibility of sending that notification up or down line. Everybody's going to get it at the same time, and it's going to be a wonderful system this week.
So are those alerts going to be very similar to how the comment, or are they just going to be put in the comment pages, so we'll just get alerts when the comments, when you make new comments? Is that the alert system?
Yes, sir. That's the best that I have right now, Chima.
No, it works great because my phone was buzzing as you were talking to everybody. Everybody was commenting. It was just buzzing and buzzing. So that's awesome. So I think
what I plan to do is now that, because all the buzzing that happened today was just verifying checks and balances. Now tomorrow, the buzzing that you'll have in your jacket pocket will be the GBP New Zealand has been updated and pending. So when we're looking at that notification, we know that something just happened, because we're going to do the same sound checks again tonight or tomorrow, because everybody has plenty of time to respond to the sound check. We just Curtis and I needed to ensure that that sound check was what we needed to do. Otherwise, I had to create a different delivery system.
Right. And I think it'll work perfectly, at least for me on my end. We had some initial things where just for everybody where the invitation was it via email, was it just inside of Dropbox? And, so I didn't get an email, but I found it inside of Dropbox. So I think now that we've got that covered, the notification part is going to be great.
Okay, that's awesome. That's music to my ears right there, because I've got 5 screens in here, and what we do, we work on 3 of them and then update on 1 of them and monitor on another. So what we'll do is we'll update that activity sheet and we'll send that alarm out or that notification out. That was Curtis's major concern, is we're not getting the notifications. And I think that based off your experience today, that we have rectified and concluded that particular part of the deal to where we can go forward with it. We'll build the activity sheet. We'll put the 5 trades on for Sunday, and we'll rock and roll with this thing. Let's go collect some pips, guys.
Let's do it.
Let's go collect some pips, man. I mean, because 800, we did 800 pips last week, Chima, and that's not my best week. It's by far not my worst week, but we had 5 feet of snow outside, Chima. I had to show snow.
Hey, my brothers, brother Shima and Xavier. This is brother Booz talking.
Brother Booz. Okay.
I just like to say, first of all, I want to thank both of you for your expertise and your willingness to assist a novice trader as myself. And one thing that I've learned, having just been in the Forex trading game since July of last year, is that I'm going to gain one of 2 things in this game. I'm going to gain some pips. I'm going to gain some experience. But I'm going to gain something.
Both.
And I'm here to tell you that I've got enough experience right now. I'm ready to gain some pips. So I'm glad to be in the group.
That's good stuff. That's good stuff. That's awesome, Brother Moves. That's awesome. That's awesome.
Okay.
That's good stuff.
So I'm excited. I'm excited. And after last week's, the last time we got the trades and I put them in and everything started going belly up, of course, I didn't call Curtis right away because I knew he was probably getting slammed because everybody was like, well, what's going on, man? What happened to my 1,000 pips? Yeah. So I kind of let it marinate for a while, but one thing I know is that I'm in it to win it. Curtis and I have talked extensively about this, and I feel very fortunate, very blessed, and very privileged to be a part of this group. And going forward, I'm sure we're gonna do some great things with this, and I'm excited about it. So I just want to say thank you, Shima, and thank you, Xavier, and to my big brother, Curtis. Thank you guys for looking out.
Thank you kindly, sir. I sent the email out last day before yesterday, actually, explaining the exact technical difficulty that we incurred on Sunday. And just to be perfectly transparent, because I will never hide or I will never duck. If I make a mistake, I will fess up to it and say that I made a mistake. Now, what happened is I logged into my trading terminal twice, and it froze the original terminal that I was on because I'm trading off an IP address, and that particular terminal gave me false indicators because the candles didn't move. We were trading on 2-hour charts, so the charts looked the same. If we would have been trading on 5-minute charts, it would have been clearly obvious that something was going wrong. But we're trading on 2-hour charts. I put those entries in, and I'm working on a different strategy on another 2-hour chart, and my terminal timed out, which is no excuse. I own that problem. But what that gave us the opportunity to do is go in there and figure out how to fix that problem, because that problem was inherently coming if it was Sunday or if it was Tuesday or if it was Thursday, because I was going to run this daily reset strategy under the umbrella of the weekly strategy at some point, and it just so happened to be that it was that Sunday night. That will not happen again because my terminal configuration is ready for prime time come tomorrow morning.
Well, all right. Enough said for me.
Well, all right. Now we got that out the way, right?
Hey, we can take that all the way to the bank.
Yes, sir. Yes, sir. Because I mean, if you look at it, and Chima, this is one thing that I know that you will appreciate. That list, that activity list that goes out, that's actually my trading journal. I'm a firm believer in you have to have a trading journal so you can take a look at what it is that you do that's working and what it is that you're doing that's not. I advise all of our traders to keep a running tab and not depend on the reports that come from your individual brokerage account. And say, look,
please.
This is what I did, and this is why I entered that trade.
Preach.
So later on, when you go back and you say, you know what, every single time I trade a trend line, I'm good. But when I trade a Fibonacci level that has not made the retracement levels, something, you're in that emotional state to where your trade is retracing deeper, and you're waiting for it to fulfill itself. But when you look at your trading journal and you say, when I trade the trend line or the backside of an upper trend line or a counter trend line break, it seems to work out pretty good. It gives you clarity going forward for you to say, you know what, I'm going to stick with what's obviously working for me. But if you don't have a trading journal to prove it to yourself, you got problems.
I'm so glad you just said that. Anybody who's on the call that was on the last 2 weeks of our Tuesday session can attest to me saying the exact same thing. There's a difference between traders who trade and traders who are successful. And not every trader sees the same thing because different things appeal to us in different ways aesthetically. Like we see the world differently through our own eyes, and trading will be no different. we may trade similar styles, but we're not always going to see the exact same trades, and that's how it works sometimes. But one of the things that you do realize when you log your trade and when you write down why, what's the reason why I got in, why did I choose this, it's important because you do, at the end of the week, you want to do some, at least a little review and to say, I did well, I didn't do well, why did I get in, why did I choose this trade, and it's so important to your growth as a trader. And for the exact same reason you mentioned, I see this type of trade better. I see this candle formation, or I trade this candle formation better than others. Let me focus on these 2 or 3. You have to go back, and a lot of times you might enter into a trade on Tuesday, and you go back to look at that trade on Thursday, and you totally forget why you were in that trade. You totally forget because now with all your new candles, that trade that you thought made sense on Tuesday, come Thursday, it doesn't make sense, and you don't even know why you're in that trade. So it happens constantly, and if you want to improve in this game, you cannot see growth if you don't register why you got in, what's going on in your head at that time of your entry.
Well said. Well said. Well said. That's well said. That list, that activity sheet, is my trading journal. If you look at the far right hand columns, there's an entry comment, a deleted comment, and an exit comment. I have to remember in 3 weeks why I deleted this trade, because the trade just fell apart. The Bank of Japan, they ran the candle up so high that the trade didn't make any sense anymore. We had to wait for it to come back down to the appropriate levels. Some kind of fundamental announcement spooked this chart. Anything. I mean, you missed the trade. You came to the trade late. Whatever it is, the trading gentlemen, if you take nothing away from me, take away the trading journal, because it's really easy to look at your account balance and say, I'm a good trader. It's really easy to do that, but it's really hard to sustain that if you can't justify why you're a good trader.
Yep.
Take that away. Just log what you do. Even if you have to cut and paste it, do whatever you got to do to log what you do and put some type of commentary in your own words to where you can look at this thing in 3 to 5 weeks and say, you know what? For example, yesterday was the last day of the last week of the last candle of the month. Sunday, we're getting brand new ones on a monthly chart that controls all time frames. You have to be able to go back and say, I took this trade because it was fulfilling a 382 retracement. That's why I exited, because it fulfilled the 382. And yes, it went up another 50 or 60 or even 100 pips, but it fulfilled what I wanted to do. That's why I got out of it.
Yep.
It hit the D extension. That's why I got out of it. I didn't get out of it because I was looking at a 30-minute candle. I got out of it because it fulfilled the retracement zone to which I saw coming. That's when you become a consciously competent trader. And that's a beautiful thing.
Man, let me tell you, I'm so glad you're here. You know what it sounds like? It sounds like I gave you some talking points. It sounds like this isn't the first time you and I have spoken. It is hilarious.
And it actually is.
It's refreshing, man. I'm so happy. Curtis has been telling me for a while. He's like, man, wait till you two guys get together. And I'm sorry that everybody has to just be a part of this conversation. Just talking shop, we can just talk for days, for sure. But it's funny, man, because in this game we've never met, guys. Believe it or not, we have never met. This is the first time that X and I have spoken, but we sound like Curtis said earlier, twins. Like there's a certain DNA that a successful trader has to have, and a lot of it is just the discipline in your approach. There are many techniques out there. I'll be the first to say that there is not just one technique that's going to make you money. I refuse to believe that. But you show me a successful trader, and I'll show you that he's a disciplined trader. Discipline in his technique, discipline in his study habits, in his preparation, in his trade log, in understanding what he does and does well. And even understanding what he doesn't do well. How about that too? So that consistency is way more important than just learning a particular trading style. Developing that technique every time before I hit enter. Like I've written down why. I understand why. You try to remove the emotion from this game because I tell people this as well. This is one of the rarest jobs in the world that you get to evaluate yourself on a daily basis. All of my other friends, they may get an evaluation once a year, at best twice a year. But in the trading game, you win or you lose. You see your account balance daily, and you have to remove that tendency to beat yourself up or give yourself too many pats on the back on a daily basis. You got to keep it together. You have to understand why you're in this. You can have a stretch of 2-3 weeks being great, and you can have a stretch of 2-3 weeks not so good. So understanding or developing a pattern around discipline is first and foremost. So it's great that you mentioned these things, and it's no wonder why you're successful because you are disciplined and you do have a style and a technique and you hold true to it. So you're right. If any takeaways from this, that journal, create a sense of discipline, stick to it, success will come.
Yes, sir. Absolutely. Absolutely. I'm a firm believer in being really good at one or two strategies than being all over the place. We can trade the T3 Tilson. We can trade the 2040 Frankfurt. We can trade all kind of different type of strategies, but get good at one or two that consistently provide you results. That's my thing, and I'm more concentrated. That's why we only have 20 pairs on this sheet. There are 60 active trades or 60 active pairs that we can trade on a daily basis. Right. I'm not interested in those. I'm interested in the 20 that I understand the heartbeat, the frequency. I understand the pulse of these trades, the daily trading ranges of these trades. These are my trades. I like them.
Right. No, I mean, and I mean, who are we fooling here? 20 trades. 20 pairs. If you can average 500, 800, 1,000 pips a month, you're doing well. The fact that through your technique you're able to see those results on a weekly basis, you don't have to expand to 60. If you're killing it with 20, and that is killing it. If you're doing that with that, then yeah, you know what you know and learn it like the back of your hand and crush it. So I agree. If this is your comfort zone, then why change it?
Very well said. Very well said, gentlemen. If there's anything else, I don't want to take up too much of you guys' time. This session is being recorded. If Curtis, if this is your position that we may need to utilize this forum on a weekly basis, just for a Saturday afternoon to look at what we're looking at for the particular pairs. For instance, when we're looking at the GBP Australian, why are we buying it and then gonna sell it? Or the Euro Australian, why are we gonna buy it and then turn around and sell it? Because we're gonna buy it to the daily 382. When traders are trading on the 15-minute candles, they cannot see the daily extensions. It's impractical to think. You have to shrink your chart down so small to see a daily extension on a 15-minute chart, but we trade on 2-hour charts. So if it's your position, Curtis, that we need to put this room on, if you will, every Saturday and take a look at what we're looking at, if nothing less for the Sunday trades. I'm not saying that or suggesting by no means or no necessary that we have to do this on a daily basis, but maybe it may be worth it between the core group of us 8 to look at it and say, this is what we're looking at, and this is how I'm justifying, because I will go to bat and defend these trades because Curtis, that I've been in the box for 5 hours on Friday night looking at them.
Absolutely.
So when I come out of that box, when I emerge and I have this game sheet, I'm looking at it and I'm saying, the Euro New Zealand, you may say, X, why are we buying this thing at market up to the right tip? Well, because it's going to fulfill that right tip of that crown. Left tip equals right tip. And then we're going to turn around and sell it so that right tip is at 1.71. You can draw it on your candles if you want. If you think that that's necessary with the commentary that we've had today, this experience to me is embryonic of something beautiful to develop.
Right.
because we
I
have
agree.
great minds here in this room. There is a lot of humble traders. There are a lot of aggressive traders. There are a lot of skillful traders in this room. If we can do this on every Saturday morning or Saturday afternoon, whatever it is
Right,
that
right.
you guys feel comfortable with, I'm willing to carve out some time to do that to make sure that we see, because the the game plan that I have, it's just a bunch of words. When you put some passion behind it and some skill sets that Chima has behind it and some experience that you have behind it, and you have the Jimmy Boos that has the hunger behind it. Now we're talking about something. We're talking about
Absolutely.
something that's malleable and formidable that we can run with and actually change some lives with, if you will.
Yeah, this is part of my vision. You know, I'm not a prophet or anything like that, but this is part of my whole vision. When I know that I got you guys on the phone together, I'm good at the networking world, bringing people. I'm a broker, man. People always ask me what I do. I'm a broker. I like to just bring talent together, people that are sharp, iron sharpen iron, you know. And so what we have here is this culture that we're developing that's going to be so contagious. People are going to want to be knocking down the doors to get a part of this group, and they're going to have to work themselves up. You know, they're going to be a step process. And so we'll develop that, and you watch what happens as time goes on. And so I'm for it. You know, I'm all for it because this is education that we get. This is one of the best calls I've ever been on in my history of just as a networker or whatever. This information that I've just heard, the confirmation, the validation, it just speaks for itself. So I'm all for it. Saturday, you know, whatever time that I want you to get you some rest because I know you work hard throughout the week. So you let us know what time is good for you, and we'll be here.
Well, if we can line that thing up with the core guys and say that this is what we'll do, I'm willing to do it. I'm willing to do it on Saturday, not only for the camaraderie of the traders, but also for the clarification of different perspectives. Because
No,
keep in mind that
I
the
think that's
batch
a great
trading is
idea.
going to be rolling out too.
Hmm. Actually, I think that's a great idea. I'm available, or I'll make myself available as well if we coordinate to do that. Um, and you know, if I'm with Curtis as well, and I know the amount of time it goes into crunching these numbers and doing the analysis and doing all this stuff. By no means do I want to overwork you either. But I agree with
Appreciate
what you're saying.
it.
The camaraderie of it, the getting together, the talking shop of it, I love it, man. So it's if we do that once a week, or every now and again we do it, or we feel like we need to do it, or if you feel like this week you got a couple complex trades coming through that you might want to explain a little bit to the group, I mean, by all means, pull the trigger. I'm there, you know. But if we want to make it every Saturday thing, I'm in for that too. Um, I'm going to obviously try my best to incorporate and through talking with you and trying to educate a little bit and try to bridge the gap on Tuesdays and just make it a part of our Tuesday lesson too.
Okay, very good.
You know, things that we're doing and even discussing trades that we were in and the trades we took and understanding why they did what they did and how they flow. So I want to incorporate that and make that a part of Tuesday as well. So I'm all for it, you know. So I'll let you pull the trigger on that, and I'm here.
Well, let's see how it goes for the next 4 or 5 trading days. Uh,
Okay.
because Chima, this is I'm a transparent guy, and my wife Shantae, she gets on me sometimes about being too transparent, but that's just how I'm wired, man.
Mm-hmm.
What we're gonna do, we're gonna run this particular daily strategy for 8 weeks, and then we're gonna go into batch trading. I
Mm-hmm.
know for a fact that you understand batch trading because
Mm-hmm.
what we're looking at is a series of crosses, the GBP crosses, the New Zealand crosses, the Euro crosses, the Australian crosses, and the
Mm-hmm.
US crosses. And what happens is when all of them break a trend line and break a stochastic line and show a candlestick formation at the same time, the
Mm-hmm.
market opens up a faucet.
Right.
That batch trading, I don't want to push it, I want to show it.
Right.
Because there's been some days that we just took batch trading, and all you have to do is look at them when you wake up, at about lunchtime, and about when you go to sleep. Because we're trading on a 1 hour candle, and the stochastic is going to allow you to have 7 candles from the peak to the valley. So if you have 7 hours on a 1 hour chart, that means you can run this thing all day long.
Right.
Now, one pair may kick out 80 pips, one pair may kick out 120, one pair may kick out 240, depending on the volatility on the daily trading range of it. But that's what I'm going to roll out. We're going to start teaching that in April. That's why we're only running this particular system for 8 weeks, because I want to give everybody that needs to get these amount of pips
Right.
to get ready for the batch trading, because the batch trading is going to dumb it down so low and keep it so simple, because all we're looking at is a stochastic, a candlestick formation, and a trend line. That's all we're looking at. And when they all line up, it's a solar eclipse, and you can ride that eclipse for 7 hours, 8 hours, because of the stochastics. You know that the stochastics, once it breaks that 80% line, that it's going to go down. It's going to push down because it has so much pressure to get to the 20% line, and it's going to be 7 candles. That's 7 hours. It's going to be a wonderful thing, and it's going to free up a lot of people's time and not have to deal with a lot of the counter trend lines, aggressive trend lines.
Right.
That's what my vision is to teach people how to basket trade. We put on 2 basket trades last week, and one of them kicked out 600 pips, and the other one kicked out 400 pips. And that was in a day.
Right.
How dare you do 600 pips a day? How dare you? How dare you do 600 pips a day? But that's where we're going. That's the end result. And I understand from Curtis's perspective is that you and I need to get in some type of alignment. So the stuff that we're working on here, you'll get it right away, and you'll say, okay, this is why he took this. This is why he didn't. This is why this failed.
Mm-hmm.
It's a perfect alignment, and I'm glad to be a part of it.
Definitely, because that will help me on my end too. Because and there's synergy here, man. So let's do it.
Let's do it. All right, gentlemen. If that's it, if there's anything else, gentlemen, if there's not, we'll close this thing out and we'll go forward or even.
All right, man. Get you some rest, man. Enjoy the family.
You know I will. I appreciate all you guys, man. This session was recorded and we'll send it out. So anybody that wasn't here or anybody that missed it, they can access.
Awesome.
All right. Thank you, sir.
Yes, sir.
Thank you, sir. I appreciate it.
So thank you guys for taking the time out. We appreciate it.
Yes, sir. Thank you.
Okay.